Today, the White House pushes for a big tax on crypto mining. Federal and international law enforcement arrest nearly 300 people and seize tens of millions of dollars worth of crypto. And leaders of digital asset teams from Northern Trust and Cantor Fitzgerald break down the future of tokenization from San Francisco. Welcome to CNBC's Crypto World. I'm Jordan Smith. Bitcoin, Ether, and Solana all reacting to the latest interest rate decision the Fed just announced this afternoon, along with new data showing private payrolls for the month of April rising way more than Wall Street expected. Today, the Fed announced another quarter percentage point rate hike in the central bank's continued effort to curb inflation while still working to prevent a prolonged recession. All right, let's talk about the top stories. First, the White House is pushing for a tax hike on crypto mining operations. According to this post from the White House's Council of Economic Advisors, a new proposal in this year's budget is the Digital Asset Mining Energy Excise Tax. The goal of the new tax is to encourage companies to, quote, start taking better account of the harms they impose on society. In the post, which was published yesterday, the administration made the case for a tax equal to 30% of a mining firm's energy cost, which, of course, could put a significant dent in the profits of these businesses at a time when crypto mining firms have already been dealing with both plunging crypto prices and higher energy costs. In fact, that was part of the reason Bitcoin miner Core Scientific filed for bankruptcy protection back in December. Next, federal and international law enforcement say they arrested 288 people and seized more than $53 million in cash and crypto in a drug enforcement operation. The dark web drug crackdown, dubbed Operation Spectre, started in 2021 and involved law enforcement across 3 continents. Attorney General Merrick Garland made the announcement yesterday in a news conference and warned the Justice Department is cracking down on criminal crypto transactions and the online criminal marketplaces that enable them. Dozens of guns and more than 850 kilograms of drugs, or around 1,900 pounds, were also seized in the operation. According to this news release from the Europol, the operation resulted in the seizure of a dark web marketplace called Monopoly Market. Garland noted that in the U.S., more than 150 people were arrested, including a man in California who allegedly sold nearly $2 million worth of meth and fentanyl on the dark web. All right, on to our main story. We're giving you an inside look at Digital Assets Week, underway right now in San Francisco. Crypto World's Tanea McKeel is there and spoke with Justin Chapman, the head of Northern Trust Digital Assets and Financial Markets Group, about the future of tokenization on Wall Street.
Tokenization seems like the obvious topic of the day. I thought I was coming to a crypto conference for bankers, but this is really focused on tokenization. But it is a blockchain conference. It is a blockchain technology conference. So tell me about the blockchain part, because it feels like this is not the first time we've heard of tokenization for sure. Why is the blockchain necessary?
Yeah, so I think blockchain was probably the catalyst for most of these conversations. I think tokenization is a product that derives from the opportunity of deploying a blockchain. So back in the day when we first looked at this at Northern Trust, about 2014, 2015, I presented to the board and it was blockchain versus Bitcoin. So the conversation was trying to create a picture of what the technology could deliver and a user practical use case at the time, which was cryptocurrencies. But actually we focused as an organisation on the actual underlying blockchain and actually what that could achieve for our products and services and capabilities. But actually what most importantly it could achieve for the end client, so the consumer of the information or data that's provided within the sources that we provide. So blockchain for us was really important because it created one truth that could carry from source issuance all the way through to the end client and be trusted. So now you can employ data to the end client without having to reconcile that information. They can have a real truth, the provenance and governance of that information, and the products and services you can build from having reliance on data are much stronger than trying to source information and having to attest that yourself. So blockchain itself offered an opportunity for us to think about efficiency, but really think about deploying data from source to the client more quickly, but with guaranteed certainty as well.
Okay, I think you said it started 2014-15, and then you went to market with a product 2017?
Yeah, our first product. So
that seems really fast.
Yeah, it was quite fast for a bank and quite fast for a new technology, but our challenge from the board was to show us what the technology can do. So we really looked at our first use case was a private equity. So it was a very disjointed process, not very transparent. So actually the data transparency of blockchain would allow us to take a legal agreement from a GP and a private equity, codify that and put that on an immutable record and deploy that to an LP or an investor. So we actually looked at the end-to-end value chain of that particular solution and deployed that within sort of 18 months of the initial conversation. Now for us, we were a particularly big player in a certain jurisdiction, so we worked with a regulator in a little island called Guernsey off of the UK, which is a big fund centre. And we worked with the regulator and we worked with the legal teams there and deployed that technology to help bring funds onto a platform that allowed the transparency at the LP end, but also allowed some efficiency for the GP as well. So with that platform sitting with about $4 billion worth of assets on it now as well. So that started out early, but it allows us to demonstrate both the efficiency side, how we work well on the regulatory barriers for deploying a new technology and new distributed ledger technology, but also gave us some efficiencies within the administration function as well as that data transparency. So it was a really exciting use case, and we got off to the mark with a real good win to start with, which is always good. But that at least also the Northern Trust could buy into the concepts of the value statement. And it's show me, don't tell me. That's really important to show that value.
What is the client feedback then? Because I've gone to many of these conferences.
Yeah.
I think around the time you were starting this, I was working at American Banker at the time, just watching the race between the startup side and the financial institutions, and were they going to build or buy or do something in-house or partner. I've watched the race to get ahead and the need to stay innovative. Are the clients feeling it, or is this something that's purely looked at in-house by the firms? How are the clients feeling it? Have they responded to it? Do you talk to them about that?
Yeah, so from a client perspective, and if you look at our clients, I don't think clients really care about tokenization and digital assets.
That's what I was hoping you would say.
But we do, and I think they care about outcomes rather than the assets themselves and how they're stored and how they're moved. So if you really look at our journey over 9 years, what we've certainly realised is what the client wants is the ability to have liquidity in a market. They want access to assets that allow them to buy assets, that allow them to make decisions on what assets to buy. So I think if you look at the deployment of tokenized assets, the upside is being able to provide more information and more data so the client to make decisions proactively about their investments or demonstrate the types of investments they're making. So if you, for example, tokenize a green bond, if you really link the attributes of that green bond and maybe the debt that's raised for projects and services off the back of that debt raised, for example, you can actually start to flow the reporting through the asset class itself back to the investor so they can demonstrate true things like ESG value because it's actually immutable from where they purchase the asset. So it's the added value that comes with the data that they get from the issuance. So they're more interested in insights, more interested in information, more interested in understanding the corporate or company they're investing in is actually living up to their responsibilities, not by attestation, but by actual fact, the data being fed into particular models and assets and algorithms. So I think the evolution of this particular tokenization is more about the data story rather than the technology deployment and efficiency.
Now, while on the ground, Crypto World also spoke with Elliot, who leads crypto, blockchain, and digital assets investment banking at Cantor Fitzgerald, about his take on tokenization.
What's your biggest takeaway from this conference so far?
I would say the attendance level. It's a lot higher than I'd expected, just given everything that we've been seeing in the crypto space. We've obviously, to use a lack of a better phrase, gone through a crypto winter. I was at the Consensus Conference last week in Austin, and I would say attendance was significantly down. You can just see it in flights were cheaper, hotels were cheap. You can actually get a hotel room.
Different kind of attendees too.
It is. It definitely is. But they do have an institutional day, and that was the first day, and I was there just for that. And even that day, there was significant attendance down. But here, I feel that the attendance is pretty high up. Pretty similar to what the levels of last year. 1, 2. I think there seems to still be a lot of enthusiasm, positivity. It isn't this negativity what I've seen at other events and conferences I've been to in the last quarter.
Interesting.
Yeah.
So what are you doing here? Tell me a little bit, just to get our viewers kind of caught up on Cantor Fitzgerald's participation in the space as to date and where it's going.
Yeah. So Cantor's taken this view that we feel that blockchain, crypto, and digital assets is definitely the way forward, especially in the fintech space. There's a lot of different areas within it that we want to participate in. Everything from what we like to say on one end, the hard infrastructure, the Bitcoin miners, the crypto exchanges, all the way to the other end of the spectrum. That's the NFT, the Web3, metaverse type companies, and everything in between. And that's what we like to call maybe the traditional fintech payment companies, online lenders that have a blockchain rail involved. And so I lead our investment banking coverage here, based out here in the Bay Area, but obviously we focus out all throughout the US and as well as international. And the reason we're here is, one, to get a little bit more, start up the conversation better with investors, to understand what are their takes, what are their thoughts post everything that's happened in the last 2 quarters of last year. Two, also to see what are some of these new and up and coming companies. Everyone always talks about whenever there's a downturn, that's the time where a lot of people are building, and it's always good to learn about these companies earlier, not just from Cantor's perspective, but also so we can help our clients to understand, one, what are some of the competition that's out there, two, what are some of their complementary services and products that they could be working with, and also three, maybe there's M&A JV partners as well. So I would say in earnest, we've probably been doing this for about 2 years now. Okay. I think it was a space that, as we're still waiting for regulation to play out, we're slowly dipping our toes in it, but I think we're seeing that there's a lot more maturity coming into the space. Regulation is still working its way through, but we feel that it will get to the point where everyone is protected. But I think from our perspective, we're focused more on the institutional aspects versus the retail. So we think a lot of the rules are already in place for the institutions. The institutions are playing by the rules. So we feel that this is a space that we should get into early, and this is something that we think we see a long-term benefit for, not just for us, but the rest of people in the industry, and also obviously in the broader blockchain crypto industry.
So it sounds like one of these use cases that's building in, I want to say bear market times, but clearly crypto's in an uptrend this year, is tokenization. It's what this whole conference is talking about. Is that something you're seeing as something that's going to be born out of this period, or are there other opportunities for institutions that you're also looking at that are kind of bubbling beneath the surface?
So I think you nailed it on the head. I think the baseline is going to be tokenization. Once you have these assets that are tokenized, there's so many different use cases for them. You can put derivatives on them. Obviously, you can open it up to the masses, whether you're tokenizing something as simple as maybe real estate, and I know some of the panelists have talked about that, to other use cases out there, even securities as well. So I think what we're seeing is that there is a lot of excitement in this space right now. There are a lot of companies here that are looking at it from many different perspectives and angles, and I think that's what we're trying to learn and understand more, is what are these other use cases that aren't necessarily obvious, and that's, I think, where we're seeing some very interesting aspects come out of that.
All right, that's all for Crypto World today, but we'll have much more from Digital Assets Week in San Francisco in tomorrow's show. We'll see you then.